Hi, and welcome back to the Food Fund, where we analyze investing in food stocks. If you love food and love buying food stocks, beverage stocks, and restaurant stocks, you will love this channel. In this video we will be analyzing if the Cheesecake Factory stock is a buy. The Cheesecake Factory, stock ticker symbol CAKE, is just one of many companies we explore on this channel. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on the Cheesecake Factory. The Cheesecake Factory was founded in 1978 by David Overton in Beverly Hills, California. Overton set out to create a unique diner experience with many options, large portions, and of course, legendary cheesecake. With 250 dishes ranging from pastas to pizzas, steaks to salads, and cheesecake, the concept quickly became popular. After going public in 1992, the company continued to expand, growing to over 300 restaurants. Today the company has nearly 48,000 employees and is a popular yet controversial date spot.
Cheesecake Factory?
Yeah.
You thought it was cool to take me to the Cheesecake Factory?
What's wrong with cheesecake?
Nothing. It's saying you have a budget, but it's cool. That's what it's giving. I thought you had motion.
Now let's look at the price action. Starting with the 1-year chart, we see that the Cheesecake Factory had a CAGR of about -11%. Zooming out to the 5-year chart, we see that the Cheesecake Factory had a CAGR of -6%. The Cheesecake Factory has done pretty poorly for a long time. If we perform a backtest comparison of investing $10,000 in the Cheesecake Factory versus the S&P 500, we find some poor results for the Cheesecake Factory. In that comparison with the S&P 500, $10,000 invested in the Cheesecake Factory would have shrunk to $8,880 or a -2% CAGR versus $20,650 or a 16% CAGR if invested in the S&P 500. This demonstrates underperformance for the Cheesecake Factory. However, the Cheesecake Factory investment would have been more volatile with a 45% standard deviation versus 19% for the S&P 500. The Cheesecake Factory underperformed the S&P 500 in terms of the best year performance, for which the Cheesecake Factory grew 3,914 versus S&P 500 31%, but outperformed the worst year performance where the Cheesecake Factory fell only 17% versus the S&P 500 18% fall. In terms of max drawdown, the Cheesecake Factory fell 64%. More than the max drawdown of 24% for the S&P 500. And surprisingly, the Cheesecake Factory did underperform the S&P 500 in comparisons using the Sharpe ratio and the Sortino ratio due to its excess volatility. Now let's hop over to market share and take a look at the Cheesecake Factory's market share. In this newest version of market share, we have a dashboard where we can see food, beverage, and restaurant stocks traded on the New York Stock Exchange or Nasdaq. The stocks are categorized by industry and sub-industry, so you can view the dashboard and quickly understand if your target industry or sub-industry is growing or shrinking. The size indicates the current share of the market, and the color scale on the right indicates the 5-year CAGR of market share growth, in green, or contraction, in red. For example, for the Cheesecake Factory we would select restaurants, notably more green than food or beverage, meaning that restaurants are the growing industry in this space. Restaurants are further divided into fast food or casual sit-down sub-industries. Here we can see the greenish hue for fast food and the reddish hue for casual restaurants, which indicates that most of the growth in the restaurant industry is coming from fast food companies. When we click on casual, we see that cake, the ticker symbol for the Cheesecake Factory, is the 5th largest block, meaning that the Cheesecake Factory's current market share of about 0.34% among all food, beverage, and restaurant stock, and is the 5th largest among casual restaurants. The faint greenish hue shows us that the Cheesecake Factory is growing market share, but very slowly, with a 1% 5-year CAGR. When we come over here and type in the ticker symbol for the Cheesecake Factory, we can see more in-depth information. Again, the current market share is 0.34% and the 5-year market share CAGR is 1%. This means the Cheesecake Factory's market share is small but growing. If we start in 2019, we see that the market share was 0.33%, fell to 0.26% in 2020, rose to 0.32% in 2021, 0.33% in 2022, and 0.34% over the trailing 12 months. The market share at the Cheesecake Factory is growing very slowly, but does not show signs of reversal, so that is good. Now let's take a look at the fundamentals. Gross margin is 40%. This is similar to other casual restaurant companies. Revenue has compounded at around 9% over the past 5 years and has reached over $3.46 billion most recently. I guess a lot of people are just fine with going to the Cheesecake Factory for dates. Looking at cash flow, we see a -1% CAGR over the last 5 years for operating cash flow, while capex has worsened at a 17% CAGR. As a result, free cash flow has fallen at a -15% CAGR. This is bad news. With operating cash flow in decline, management has continued to spend increasing amounts on capex, dramatically reducing free cash flow in the process. The good news is that the company is still free cash flow positive for the time being. Weighted average shares outstanding have grown over the last 5 years, going from 44.5 million shares in 2019 to 49.3 million shares most recently. The Cheesecake Factory has been diluting shareholders at a rate of nearly 3% per year. This is the opposite of what we want to see. The silver lining here is that the company appears to have started to buy back shares in 2023. Given the poor price action over the last 5 years, it does look like there are some decent opportunities for management to buy back undervalued shares. This could be a positive catalyst for shareholders over the next few years. Now let's view return on invested capital. Return on invested capital has fallen from 5.5% in 2019 to 5.3% in 2023. It is clear from this chart that 2020 was a rough year for the Cheesecake Factory, as it was for many restaurant companies. Since then, the Cheesecake Factory has become more efficient in driving profits from its investments. However, I am not hopeful that this trend will continue. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from 5 days in 2019 to 8 days most recently, the Cheesecake Factory has gotten slightly less efficient over time. However, 8 days is a perfectly acceptable cash conversion cycle. Now, let's look at the Cheesecake Factory's debt. The net debt to EBITDA has increased just slightly over the past 5 years, going from 7.2 in 2019 to 8 most recently. This is way too high. The company likely took on debt to rebuild after 2020. With the net debt to EBITDA having peaked at the end of 2022, it looks like management is making some headway paying down the debt. Last, let's explore dividends. Current dividend is a healthy 3.8% with a dividend payout percentage of 61%. The Cheesecake Factory is paying out dividends that its earnings can support. This indicates that the company's dividend practice should be sustainable, though the payout ratio is a bit high for me. Dividends per share for this company have grown at a -2.1% dividend per share CAGR over the past 5 years and an 8% dividend per share CAGR over the past 10 years. The Cheesecake Factory's dividend was reduced dramatically in 2020 and has been scaling back up since. Barring any other travesties, I think dividends per share will return back to 2019 levels. The fundamentals of the Cheesecake Factory are pretty mid. In any event, should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for the Cheesecake Factory. It is a restaurant company with a gross margin of 40%. The 5-year revenue per share CAGR is 6% and the 5-year free cash flow per share CAGR is -17%. The steady revenue and good gross margin cannot outweigh the hefty free cash flow decline. A return on invested capital of 5% is very low. Next, the cash conversion cycle of 8 days is not bad, but I would like to see this value get closer to 0. Concerning debt, a net debt to EBITDA of 8 means that it would take the Cheesecake Factory 8 years of earnings to pay back their debt. This is way too much debt and puts the company at risk. So from a fundamental standpoint, the Cheesecake Factory leaves a lot to be desired. Now let's switch our attention over to valuation. The Cheesecake Factory is undervalued relative to the S&P 500 with a ratio of 0.7. The price to earnings growth, or PEG ratio, is 0.5, indicating that the Cheesecake Factory is very undervalued relative to their projected earnings growth. Though the Cheesecake Factory's market share growth has been acceptable over the past 5 years, there are a number of challenges for the company. Free cash flow decline is very worrisome. If the free cash flow margins continue to be compressed, then the company will have to cut capex and make some very important decisions regarding the direction of the company. The Cheesecake Factory could also be in trouble due to its high debt load. Though the interest rate on that debt is very low, the Cheesecake Factory has an interesting capital allocation exercise to perform. With long-term debt at $470 million and cash at $64 million, the Cheesecake Factory is going to have to choose where to push that shrinking free cash flow pile, paying off the massive debt load versus building up a cash pile that could earn 5%. In summary, the Cheesecake Factory is a growing restaurant company that is running into some capital allocation challenges. Despite the attractive valuation, in my opinion, there are easier companies to invest in with more growth and less headaches. For me, the Cheesecake Factory is not going on the watch list. Many thanks for watching. What do you think about the Cheesecake Factory and their capital allocation problem? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.